Right now, millions of investors think they're making smart decisions, but by 2027, most of them could lose everything. Here's why. And in the next few minutes, I'll show you exactly what's happening and how you can stay ahead. Did you know that over 80% of investors lose money during major market shifts? Now here's the scary part. The next big shift might be closer than you think. Some experts believe that 2027 could completely change the financial market as we know it. And if you're not prepared, you could be on the losing side. Right now, everything looks normal on the surface. Markets are moving, people are investing, and AI is booming. But underneath, there are warning signs building up. Here's the problem. Most people think the market will keep going up forever. They believe that if something is trending today, it will continue tomorrow. But that's not how markets work. Think about it like this. Imagine you're inflating a balloon. At first, it grows slowly, then faster, then faster. Everything looks exciting until suddenly it bursts. That's exactly how financial bubbles work, and many signs today suggest we might be inflating another one. We've seen this before. In the past, during the dot-com era, people invested in anything related to the internet. It didn't matter if the company had profits or not. As long as it sounded futuristic, people bought it. And then the crash came. Millions of investors lost their money. Fast forward to today, and we're seeing something very similar with AI and tech stocks. Companies are being valued at extremely high prices, even when their actual earnings don't justify it. Now, this doesn't mean AI is bad. In fact, AI is powerful and will shape the future. But here's the truth most people ignore. Even great technology can be part of a bubble. So what makes 2027 so important? Many analysts believe that the current cycle of growth, inflation, and interest rates could reach a breaking point around that time. When that happens, markets don't just slow down, they correct hard. And the people who suffer the most are those who invested without a plan. This brings us to the biggest mistake investors make: chasing hype. People see others making money and they jump in late. They buy high thinking it will go even higher. But when the market turns, they panic and sell low. It's the exact opposite of what successful investors do. So how do you avoid becoming part of that 80% who lose money? Let's break it down into simple steps. First, stop chasing hype. Just because everyone is talking about a stock doesn't mean it's a good investment. Always ask yourself, does this company have a real value or is it just trending? Second, diversify your investments. Never put all your money into one stock or one sector. Spread it out. Think of it like building a team. You don't want just one strong player, you want a balanced squad. Third, think long-term. Markets go up and down, but over time, strong investments grow. If you panic during short-term drops, you lock in losses. Patience is your biggest advantage. Fourth, take profits when you can. If an investment grows significantly, don't be afraid to secure some gains. You don't have to sell everything, just reduce risk. Let me give you a simple example. Two friends, Zach and Alex, both started investing during a market boom. Zach followed the hype. He bought trending stocks at their peak because everyone online said they would keep rising. Zach took a different approach. He invested in a mix of assets, did his research, and stayed patient. When the market dropped, Alex panicked. He sold everything at a loss. But Alex stayed calm. He had diversified investments, so his losses were smaller. And over time, his portfolio recovered and continued to grow. This is the difference between emotional investing and smart investing. Here's another important point most beginners ignore. Timing the market is extremely difficult. Even professional investors get it wrong. Instead of trying to predict the exact moment of a crash, focus on building a strategy that works in any condition. Think of your money like a tree. You don't dig it up every time the weather changes. You water it, protect it, and give it time to grow. Now, let's talk about what you can do starting today. Start by reviewing your current investments. Are you overexposed to one sector? Are you investing based on research or just trends? Next, create a simple plan. Decide how much you will invest regularly and stick to it. Consistency beats guessing. Also, keep some cash available. This gives you opportunities to invest when prices drop. Smart investors don't fear crashes, they prepare for them. And most importantly, keep learning. The more you understand the market, the better decisions you'll make. So yes, 2027 could bring major changes. It could create fear, uncertainty, and losses for many people. But for those who are prepared, it could also create opportunities. The difference comes down to one thing: your strategy. If you want to stay ahead, protect your money, and actually grow your wealth in the coming years, now is the time to act. If you found this helpful, make sure to like this video, subscribe to the channel, and comment below with what you think will happen in 2027. Remember, don't follow the crowd. Build your own path, stay patient, and grow your money the smart way.